So today we are tackling something huge. We're going after the invisible enemy that is literally sitting right next to you at your trading desk. We're talking about emotional decision making. You know, that deeply frustrating cycle of self-sabotage and the profound psychology behind why we sometimes do the exact opposite of what our trading plan tells us to do. If you've ever stared at a screen, completely frozen in place, or clicked buy when you absolutely knew you shouldn't have, you are in the right place. We're going to break down exactly what is happening in your brain and, way more importantly, how to fix it using the actual science of decision making.
You don't lose in the market. You lose in your mind.
This is Trained Mind Trading, the channel for traders who know what to do, but still don't do it. And here, you'll train your mind to finally change that.
Let me ask you a question, and I want you to be brutally honest with yourself. Why do you sabotage valid trades? Seriously, why do you hesitate when a totally perfect setup flashes right in front of your eyes? Why do you chase a stock that's already run away from you, or panic and cut a winning trade way too early, just completely destroying your risk-to-reward ratio? You know the rules, right? You've studied the charts, you have a system, and yet, when the market is open and the lights are on, something just overrides your logic. If this sounds painfully familiar, I want to validate that daily emotional pain right now. You aren't lacking discipline. You're actually fighting a hidden biological drive. Well, it comes down to this brutal, invisible psychological loop. It's basically the anatomy of a blown trade. It starts with anticipating pain. You sit there and imagine just how awful it's going to feel if you get it wrong. And because of that fear, you make an irrational choice. You hesitate, or maybe you force a bad entry. Then the inevitable happens. The trade goes south, or you miss the big move entirely, and you experience this intense, crushing regret, which, incredibly, just primes you to anticipate even more pain on the very next setup. You just repeat the loop. It's a hamster wheel of bad decisions. But today, we are going to break this cycle using a really practical scientific framework. Okay, let's dive into the science of this for a second. The academic root of your trading problem actually has a name. It was formalized back in 1982 by behavioral economists Graham Loomes and Robert Shugden, and it's called regret theory. It proposes that people don't just evaluate the simple mathematical outcome of a choice. Instead, we anticipate future regret, and we make decisions specifically to avoid that terrible feeling, rather than making the decision that maximizes our expected value. When you're looking at a chart, your brain is secretly simulating these scenarios. What if I'm wrong? What am I going to feel if I miss out? It then chooses the path of least emotional resistance, not the path of highest profitability. To really get a grip on this, you have to separate it from other mental traps. You know loss aversion, right? That's just the pure fear of losing money. The internal monologue is simply, I don't want to lose. Then you have the sunk cost effect, which is this toxic attachment to a past investment where you tell yourself, man, I'm already lost too much to quit now. But regret theory, that is the fear of future emotional pain. The internal monologue there is, I don't want to feel stupid later. It's that exact fear of feeling like a total fool that makes you pull your order right before it fills. Let's walk through an agonizing, real-world scenario that I know you've experienced. Step 1, you spot a flawless breakout setup, but you hesitate. What if it's a fake out, you think? Step 2, you do nothing and watch the stock run 5% without you. Your brain is literally screaming, you missed it, you idiot! Step 3, desperate to alleviate that pain, you enter the very next trade early, completely out of frustration and without any real confirmation. Step 4, that forced trade fails. Boom. Now you are trapped in a double regret loop. You regret missing the first trade, and you regret taking the second one. This is exactly how self-sabotage compounds. Now, the actual engine powering all of this misery is something psychologists call counterfactual thinking. Basically, your brain is constantly playing a game of what actually happened versus what could have happened. If you close a winning trade for a small profit and then it goes on to run another 20%, you don't celebrate the win, do you? Nope. Your brain simulates the alternative reality where you held, and it punishes you with the pain of the difference. Your brain is just a non-stop simulator of alternative realities, and that is precisely what drives revenge trading and all that hesitation. And guys, this isn't just a metaphor. We're talking about your actual physical hardware here, your brain on regret. The orbitofrontal cortex and the anterior cingulate cortex are the specific areas of your brain that evaluate outcomes, weigh alternatives, and calculate emotional costs. These regions are constantly lighting up when you trade. The translation here is profound. Your brain is literally wired to avoid regret. It is a fundamental survival mechanism. Your biology will actively work to prevent you from feeling the pain of a bad decision, even if that avoidance completely destroys your statistical trading edge. So here's the absolute game-changer realization. Regret? It is really just ego protection in disguise. Think about that for a second. When you skip a valid trade or hold a loser way too long hoping it bounces back, you aren't just avoiding a financial loss. You are fiercely protecting your ego from having to admit, I made a bad decision. It's the pain to your self-image that you are running from. Once you understand that you are fighting your own ego's desperate need to be right, you can finally start to disarm it. If you leave this unchecked, the danger to your trading career is absolutely catastrophic. First off, it completely breaks your probabilistic thinking. Trading requires you to think in distributions, knowing that any single trade is completely random, but an edge plays out over 100 trades. Regret forces you into single outcome thinking. You start obsessing over this one specific trade. Second, it makes you incredibly outcome dependent. You start judging a good trade purely as one that made money, rather than one where you actually followed your rules. Finally, every time you experience this, it reinforces negative emotional memory loops, physically strengthening the neural pathways that are going to bias your future decisions. So how do we fix it? Well, we have to fundamentally flip our mental paradigm. You literally have to transition away from outcome thinking, asking yourself, did I make money? To process thinking, where the only question that matters is, did I follow my system? Listen, if you took a valid setup according to your rules and it hit your stop loss, that is a good trade. You have to train your mind to feel pride in system execution, separating your ego entirely from the financial result of any single interaction with the market. This brings us to a concept I absolutely love: regret immunization. This is how you take the steering wheel back. Step 1. Pre-commit to the potential loss before you even click buy. Say out loud, this trade may lose and I fully accept that. Doing that drastically reduces the anticipated regret. Step 2. Ask yourself the golden question. Which regret can I live with? Can you live with the regret of a small, managed loss? Or the regret of missing a massive opportunity? Choose your emotional risk consciously. And step 3. Build mechanical entry and exit rules. Regret absolutely thrives in ambiguity. Less mid-trade thinking simply equals less room for regret. But your job isn't done when the position is closed. You need strict post-trade mechanics too. First, start journaling your regrets separately. Track the trades you didn't take, the ones you chased, and the ones you exited early. You will spot your personal self-sabotage patterns incredibly fast. Second, delay your emotional reaction. Do not evaluate a trade the second you close it. Wait 30 minutes, or even better, wait until the end of the day. Finally, reframe the regret itself. Don't say, I regret this. Say, this is actionable data feedback about my decision-making process. These mechanics are how you stop the emotional imprinting we talked about earlier, turning regret from a paralyzing fear into pure actionable data. I want to wrap up this explainer by leaving you with one incredibly powerful thought. You are not afraid of losing money. You are afraid of regretting your decisions. Your hesitation is rooted in a desperate need to protect your ego. But by pre-committing to risk, focusing on process over outcome, and delaying your emotional reactions, you now have the practical tools to overcome it. So, knowing what you are truly afraid of, how are you going to trade effectively tomorrow?
That's one more pattern. Named, understood, and now in your hands. Becoming a profitable trader isn't about the next setup. It's about becoming the person who can follow it. Subscribe for your regular bite of wisdom. Train the mind, the trades will follow.